So one of the benefits of being a private lender and a private fund is that, or a private placement fund, is that, uh, well, let me back up. One of the big advantages of having short term loans as our model is that we're not tied into long term contracts and we can change as the markets change. And we are in a different market now. We have rates that increase dramatically, which has caused a problem in the system. Deals that started a few years ago are no longer penciling out. We have individuals who are starting to go into foreclosure. Uh, Banks learned from 2008 they don't really want to go into the foreclosure piece. They would much rather write that loan off as a loss, like you would if you were a credit card company. You would write off that uh, part or all of the loan as a loss, and then sell that note to a note buyer. And that gives us a great opportunity as loan originations slow down. As a fund, we can still go out and buy reperforming or non performing notes and get them reperforming and still bring a decent yield into the fund because you're buying these notes at pennies on the dollar. Back when, Eddie Speed is a really good friend of ours. Uh, Wendy and I both went to note school several times. And listen, we've been in the mortgage business for uh, 30 plus years each. And I still learn new stuff all the time. Eddie's a great teacher. But that said, that gives us a strategy where if our loan origination slow down, then we can go out and buy existing notes with the money that we have in the fund. We're going to get them at, like I said, pennies on the dollar. So that is going to continue to keep the yields up and continue to keep us in the same business that we're in. We're still going to be doing single family homes. We're still going to be doing multifamily and strip centers and self storage. All of that you can buy in notes that are either reperforming or are non performing. And what you do is you buy them at such a low price that you can modify them for the current owner, keep them in position, and get them to make payments, and you're still going to get a great yield. So, and I don't have a calculator right in front of me, but if I bought a loan that is based on $100,000 at 4% interest, but I buy that loan for $20,000, the payments that I'm going to get when I modify this thing, and let's say I lower their payments, even lower their interest rate, but I've paid so little for it, the payments that I'm getting a month are going to average out to a 8, 9, 10% return. That's the beauty of buying notes. We can also sell income stream. We can hang out if it's a long-term note. We can sell 36 months to 60 months of the income stream to someone else. Take that cash, put it in to buy new notes with. When those notes pay off, what I mean by that is the owner that bought the 36 months or 60 months worth of income stream, when they get paid their amount, it reverts back to us as owners. And now we get the residual for free, essentially. So there's great ways to work this. I love the note space. I am Bill Fairman. If you're a passive investor that is accredited and you're interested in investing in a fund like ours, go to billfairman.com. That's Bill, FAIRMAN.com. I've got great educational material, wonderful videos, and all of our contact information is on billfairman.com.